Okay, hello guys. Let me briefly show you how you can use a top-down analysis using two time frame and probably we call it the higher time frame and the lower time frame. So in this scenario, I'm going to use daily time frame, then show you where you can pick your entry. But before I get to that level, I use daily as an higher time frame and 1 hour as a lower time frame. If you can make a decision to use 4 hours, if you're using 4 hours as an higher time frame, as your higher time frame, then it means that you will use 15 minutes as your lower entry model, the entry time frame. Then if you're using 1 hour, it means you use 5 minutes. So before I proceed, let me illustrate something for you so that when I get to the chart, you will understand what exactly I'm saying. So in a situation that we have the a market that is bullish in daily time frame. So we have this as a break of structure. Why is it break of structure? Because he came back for this inducement and took out this inducement. So in a situation that we had something like this and market created another inducement, immediately market take out this inducement, what we are looking for is just two things. We want to see a valid order block below the inducement, and the next one is extreme. So those are just the two levels we'll be positioning for. So sometimes market will get to our OB and we react. Sometimes it will only come for the liquidity and push. But I don't want to talk about the inducement entry model here. I just want to talk about the how you can pick your entry from other block exactly. So in a situation that we have something like this, let's say market reacted from here and push up and break this structure, it means that our low will be here. It means that our low will be here. Then it means that this one is not valid anymore. So but anything that make the market to come down below here, it means we have change of character, and we'll be waiting for market to take out this inducement, probably mitigate our extreme, then drop. So that's how we'll be following through the market, and if the situation change again, we do the same thing, because this level will now serve as our change of character. This level will serve as our change of character, and probably maybe market will create another inducement, or if it doesn't, it means that sorry, if it doesn't, it means that market will need to come down to this level like this, because this might be our last pullback, then probably mitigate something here, then we continue looking for buy. So in this top down analysis, you can see market give us bullish, bearish, then continue bullish. So what we want to be taking our entry is this level. Then when we add change of character, where we want to take our entry is this. Then this extreme, where we want to take our entry is this. So and probably this level. This is where we want to take our entry. So in this situation now, when market gets here, we will now switch to 1 hour and start looking for entry model that will be telling us to buy, not sell. We start looking for change of character, inducements in 1 hour, then POIs, then in 1 hour, then we buy to the up. We are not looking for sell until market break this level. So our target will be buying from here to here. Remember, this is going to be the higher time frame, and the lower time frame can give you 2 or 3 entry or more before the market get to this level. So and that's how the process will continue. Then when we add a change of character here and market get to this level, what we want to do is to be looking for sell until market get to this level. So that's just how top down analysis work, and I've marked this structure down so that it will save us time. So as you can see, we had change of character here because market was bearish. We had change of character here, and as you can see, I I mark my inducement from this level. This shows my inducements level. Then this is my decisional order block. Remember I said we have two other blocks that we'll be waiting for. This is the first one and this is the second one. So this is the only two other blocks that are valid. The market is likely to come to, because of the it has fair value gap and it meets all our criteria. So, and you can see market reacted from here. So it means that we are coming here in 1 hour, switch to 1 hour and start looking for buy until market get to this level. But in the first that the market refused to get here, it means the market need more liquidity. So market refused to break through. It just created equal high. So it means the market created liquidity at the top, but it need more liquidity before it will now come back here. And you see market came back to this level. This is not change of character. Why? Because the structure is still intact. Because it reacted from this level. So there's still the tendency that market can push up and come to this other block. So our low is here that has to be taken out before we can be talking about change of character. So to cut the whole story short, you can see markets came back for more liquidity and finally push up. So it means that we have break of structure here. And what next are we going to look out for? We have to look out for our inducement. And you can see this is where our last pullback fall, because if you take it from here like this, you can see that this is where our last pullback fall. So you can see that this is where the last pullback falls. And what are we going to do next? We mark our other block that is valid, the first one and the second one. And when market get to this level, this is what we are going to do. Come to 1 hour and start buying to this level. So you can have 2 or 3 positions in this level. So what next are we going to do again? After market gave us break of structure, then we need to look for our pullback, which serve as our inducement. And you can see this is the only pullback that the market created on its way to this level. You can see this is the only pullback that the market created, and boom. So this is the last one. So irrespective of how big it is, that's exactly what we work with. So and if you can see it clearly, you see the market went there. But why don't I have other block mark the POI? Because there is no POI for me to mark. So it's a sign that this level is likely going to fail. So, and you can see market failed this level, gave us change of character. I mark my decisional POI again, and I mark my IDM again, inducement again, and what? And I mark my decisional POI again. Then I mark my extreme. So you can see market reacted from here. So if we are to take a trade, we can easily add something like this from here. Then probably will be stopped out in SL, or probably if you know how to manage your risk, maybe break even. So it means that market is attracted to this POI. So all these are just noise. In a real sense, if I'm to be in this market, I'll just be looking for buy because I know this is where the market is coming to. And finally, market got to this level. Remember, we had change of character. So market is supposed to respect this level, then drop. But unfortunately, you can see market got to this level. We also need to go to 1 hour and look for entry model. Our entry model, look for change of character inducement, and probably will stop out in break even here too, or had some maybe 1 to 2 or 1 to 3. So and finally we had change of character here. So what next are we going to do after change of character? The process continue. Identify your inducement, identify your what? Your decisional POI, and as you can see, if you are to trade here, if you have 1 hour confirmation entry here, change of character, then that's fine. If you don't, it means that this level is likely going to fail, and it failed, and you see. So market got to this extreme and see how we respected it clearly. So you can see that this just how the market work. If you can take a trade from here to here, it's about 1,200 pips. So it means that you can have multiple entries, maybe 1, 2, 3. One good thing about this top-down analysis is that it enable you to know the direction where the market is actually going to. So you don't need to be looking for sell while the higher time frame is telling you to buy. So in this situation now, you just go to 1 hour and start looking for buy. If the structure gives you in between in 1 hour, maybe it gives you sell, you will ignore it because you know that it's just going to be a trap. So when the market switch back to buy setup for you, then you start engaging until market gets to this level. So immediately that one happens, I was able to catch this trade down because of my experience that when this one fail, market is likely coming here. So I sold all the way to this level last year, towards to the end of last year. Immediately January kickstart market mitigate this level, I started buying to this level. So as you can see, when market mitigate this level, take out this level, which is break of structure, I marked it and identify my inducement, and market came back for inducement. it refused to come to our POI, the market boom. So it means that we had a structural low that must be protected at this level. So you can look for buy here after inducement has been taken out. One key thing is that you should not look for buy in 1 hour or in lower time frame before inducement has been taken out. What is mostly important is the inducement, not even the POI. It's just the inducement. The inducement markets must take it out. It doesn't promise you that it will definitely come to your POI, but coming to POI is just high probability level that you can take your trade. So as you can see, market only took out inducement here and boom, the buy momentum continue. And after we break this structure again, it means that this low is my low, this level is my level, is my low. Then I'm looking for high, and as you can see, market took out this inducement and push up. But just because when market pushed up, broke this high, I, I can't mark this level because there is no inducement after market broke this high. So I'm waiting for inducement, and if market refuses to print an inducement, it means that this low might serve as my new inducement. So we do not have break of structure here. So that's just the current situation of the market here. And you can see market came back from this inducement and did what? And failed. So since we had this other block that has been failed, I will be watching because normally I wanted to start buying from this level, from this other block. I wanted to start buying, but market failed this other block. So it's a sign for me that I should just be careful. So, but as it is now, if the market prints me buy momentum in 1 hour, and I will definitely try to engage, but I will be very, very careful because market can come down and use this level as an inducement and mitigate something as an inducement and mitigate something here, maybe somewhere here, then start coming down. So whichever way, I will be waiting. And if we have a situation that market push down like this, it means that I have change of character here. I will wait for my inducement to be taken out. Then probably I have my decisional POI here. Then this level will serve as my extreme. So so that's how I will keep engaging. So if the market come down and mitigate here and give me 1 hour entry confirmation, then I will start selling to this level. So that's how the process will continue. So if you have any other question regarding to this top down analysis, you can let me know and I'll be glad to answer your question. So thanks guys for today's video. Bye.